No diamonds, but no gold.
Okay, but let's get to the big event, right? That's on Monday. Donald Trump is all set to be sworn in as the 47th president of the United States. What does this mean, right? We've been talking about tariffs now for the last few months.
As Elon Musk tweeted, success, we don't know, entertainment is guaranteed, right? Let me actually go across to the wall and just put out some points here, which will give you a sense of what are we looking at. So I'll start with what has he said during campaigning, during the period of campaigning. I mean, just the basics. He said, well, he'll impose tariffs on all imports ranging between 10 and 20%. He said on China, import tariffs could be between 10 to 60%. And he also then sort of lately said 25% tariffs on Canada and Mexico on day one. This is what he said. So there are two things, the scale of the tariffs and how the tariffs will be actually implemented. I've just sort of divided this into four parts. One is we see a repeat of 2017. And what was 2017? US negotiated but did not act aggressively. Actually, the effective tariff rate in 2017-18 period only went up 18%. This is during Trump 1.0. What happened during this period? The renminbi depreciated 14% versus the US dollar. The dollar index was up 11% in this particular period. I think a repeat of 2017 is unlikely because, he's obviously promised much more. He has the experience of his previous term. And his base wants it. I mean, he's swept the polls, and I think 2017, expecting a 2017 perhaps is a low probability chance. We'll see something bigger. The number two is sort of probability is gradual implementation of tariffs. Here, naturally, I mean, if you sort of, go back and forth, it gives you more leverage in negotiations versus sort of putting the full size of the tariffs on day one, optionality to increase or decrease the rate of hikes as one goes on. But how will markets react? There is a clue, because on the 13th of January, there were headlines that in news reports which were later denied. But these are like, balloons, trial balloons floated, maybe, I don't know. But how did markets react to that headline? The headline was that Trump's team was studying monthly small tariff hikes of between 2 and 5%. The dollar sold off very, very sharply, very, very quickly. So if this happens, which is a gradual monthly increase or whatever, probably we see the dollar coming off sharply. Number three is targeted industry tariffs. So, tariffs on Canadian autos, lumber, Chinese machinery, electronics, etc., etc. This perhaps is the most complicated of the lot because, markets will have to go to every isolated tariff on this product or that industry, and it's going to be harder to kind of decipher. Also, lots of speculation around who could be next, retaliation, etc., etc. Again here, if this is the case, it will be considered mild because, again, on the 6th of January, there was a news report which suggested exactly this, which is it's not going to be on all imports into the US, it's going to be targeted. What happened? The dollar sold off very, very quickly. So, we know we have markets react, at least the macro markets reacting to these headlines, and so we know what will cause the dollar to go up and what will cause the dollar to go down. And, of course, we come to the last one, which will be the most severe, which is all the big guns out on day one, big tariffs on day one. And I think this would see significant adverse market impact across asset classes. And of course, I think the dollar could skyrocket on tariffs, inflation concerns, etc. So these are the four things. We know it will happen. It won't be mild, but will it be severe on day one, all out on day one? I think that's the thing we are sort of yet not clear about, and we'll know Monday evening. Back to you guys.
Well, nice caption, Prashant. Trump, the tariff king. Interesting data there. But out of time completely in this edition.